The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Friday, the 28th of May, 2021. On the podcast today, Paul Hill, full-time investor and equity analyst, gives his view on the market and stocks to watch, including Avacta, Gfinity, Trellus Health, which IPO today, Belluscura, which also IPO today, Polarean Imaging, Equals, Aviva, and we also talk about Lloyd's. Plus, at the end of the podcast, I have two lists for you, the top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most read RNSs too. You can check out both these lists at voxmarkets.co.uk, where you'll also see lots of their content. Traders Cafe with Zach Meir, Bulletin Board Heroes, May 28th. What's in there? Corsair, Crossword, Frontier IP, GS Technologies. Plenty of companies there he's looking at. There's also an article on Oilex. There's an interview with Alba Minerals' George Franciscidis with Francesca, and there's an article on Belluscura and Trellus Health. Plus, of course, don't forget our COVID-19 index. Biggest rise of the day is Frontier IP Group, up close to 10% to 96 pence. Biggest faller, Dev Clever Holdings, down 6.7% to 24.25. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Paul Hill, equity analyst, full-time investor, and of course, also on video. Don't forget the video. If you like to see Paul's smiley, happy face, I know it just lifts your day. I think when I wake up in the morning, I think, oh, do you know what? I'm speaking to Paul today. He's always a bit smiley. He lifts my day.
You're very smiley yourself there, Justin. But let's pat each other. Let's pat each other back as we go into a long bank holiday, and the weather forecast is fabulous. And also, you're going on holiday, sort of crabbing and mackerel fishing. So I'm very jealous.
Yeah, I think this is the weekend where the economy really picks up a little bit, and people start spending like crazy because, like I said, the weather's there. You're free to do what you pretty much want to do, most things anyway. But we're still getting fishing, mackerel fishing. You said highly recommend it.
Get your fish and chips in. Get your sort of like your 99 ice cream as well from the ice cream man who comes round in his van. So do everything you need to do on a British holiday. It'll be brilliant. I mean, it couldn't be better. Fantastic weather for it.
But you know what? There's things that are simple things in life sometimes, are worth appreciating. And just a small thing I read this week. I've read it before. I think it was a Chinese philosopher said, if you're always looking back at the past, you get depressed. If you always look forward, you're always anxious. Try and experience the now. That's happiness. That's appreciate what you have. And even when you're sitting there, on a coast somewhere, just having ice cream, this is nice.
Yeah, live in the moment.
I know, live in the moment.
Live in the moment.
That's the trouble with stocks too much. Stocks sometimes, we're always hoping for the future, a better future with stocks, and that's how the stock market works. They look forward to sort of future earnings. I've seen a lot of people on Twitter of late, I don't know, maybe they're in resource stocks or something, or what stock they're in, but said, this is hard work now. And I've seen a lot of people join the stock market since the big dash for cash crash happened. And it's been quite easy. You're going to pick any company in that crash, and you could have done well. You didn't have to, literally, if you'd started on March 25th, 26th, or the start of April, investing last year, you've done very well. And now it's maybe we've had that quick, fast, easy money, and now you have to start picking good companies. I think now you have to be a stock selector.
Trying to actually time or pick the bottom of a huge crash. Let's be clear about it. It's not frankly that easy.
It's not.
Who would have said, let's say 5 p.m. on Wednesday, the 23rd of March. Yeah, that's going to be the bottom of the market. I mean, let's be clear about it. It's impossible to do that. What I'm saying
what I'm saying though is people who joined, because obviously new people start investing all the time. And I think a lot of the time that's coincided with the Bitcoin going up as well. People got involved in that. But I mean, I think it's been quite an easy ride, in the markets. I think, since April, pretty much up to the end of the year, and everyone thought lockdown and all that's really hard work. Now I think it starts, you start having to be a bit more selective, because what I'm saying is that all the tide rose pretty much after that big sell-off, and now you're starting to see Well, some of the nice boats, the sides have gone down a little bit, maybe settling, and you're starting to see the nice boats, and the ugly boats. And you know, hang on, maybe I'm in the wrong boat here. But I just think now it becomes a little more selective, stock picking, because everything hasn't been sold off now. We're back to a certain level, and so you have to pick those growers or those good businesses churning out cash or whatever, because there was a certain place. I mean, testing stocks, for example, a lot of people just jumped in those, did so well. Some people, first time they've ever traded, ever invested, they did so well, and some people jumped in, blockchain related stocks, and again they did so well. Now even Bitcoin's having a rollover, and they're finding it hard. So those two sectors of market, people are rotating out of those, and so that's very hard. Now you have to look elsewhere for other opportunities. I think there's always opportunities. There's always opportunities in the market, isn't there? But you just got to find them.
Yeah, I mean, just on that testing, actually, there's one company that everybody follows, which is Avacta. And I mean, just remind everybody, they've got two platforms. They've got their Aviva platform, and they've got the precision chemo warhead platform, which helps on sort of cancer treatments, etc. And the Aviva platform does therapeutics and diagnostics, and it's obviously got a very, very accurate, rapid lateral flow test has been developed. It has been developed. It's basically got the got the accuracy. I mean, it's almost 100% accurate for identifying people who are infectious, and it's just waiting for its CE mark from the authorities. It submitted its dossier a couple of weeks, well, more than that, about 3 weeks ago, and the company was hoping to get approval by the end of the month, end of May. And given it's Friday and it's the last day of the month, they've just made a quick announcement just saying actually they haven't yet got it, they're still awaiting. The important bit is that they haven't heard from the guys, so we shouldn't read anything into it. And I think that's how the market and investors are sort of viewing it, because I was looking at the shares just earlier on and they haven't moved. In fact, they're slightly up on the day, so don't get, I always say to investors, don't read anything into that. It will come, I'm sure, because there's no reason, there's no benefit for the authorities to delay a market-leading lateral flow test. So it's just business as usual for those guys. And but the beauty about somebody like Avacta is this is just one. And I remember interviewing Alistair Smith a long time. This is just one of their symphonies that the company, i.e. Mozart, is playing, because there's lots of opportunities, whether it's third-party licensing, whether it's in-house therapeutic development, further diagnostics. So there's there's multiple ways of actually making good money out of that portfolio. Lots of shots on goal, and this is just one. Admittedly, it's one of the biggest and it's one of the first, but they've just basically clarified that this morning that they hadn't yet received their CE marking, but I personally believe it's going to come, and I think that's how the market's viewed it, because it hasn't done anything this morning.
Yeah, and we always as investors want things to happen a lot quicker than things actually happen in real life. I mean, it's just especially when you're dealing with government bodies and departments and all that. There's so many sort of red lines and dots.
Well, the thing is, Justin. When we chat, your patience threshold is somewhat less than mine, and I can imagine if other investors are anything like you, I think your observation there that we want things moving faster than the world can is not a surprise.
The thing is, people want to make money now; they want to get rich tomorrow.
Exactly.
That's the thing. It's I've gone out companies, and this. Do you know what? I actually said about this in my investment group this morning. A guy was talking about his company was looking into getting exposure in esports, branding, alignment, all that. And I said, this is the thing that I've made mistakes on. I've gone into sectors that are quite hot. Like, I see them being hot for a long time. It's a new mega trend. Yeah,
I hadn't noticed.
So what happens is this, right? Is we get into a super hot mega trend sector. You're ahead of the curve generally as an investor if you're investing, and you're looking at it and thinking, why isn't it moving? And you can hold for like 6 months and think, what's going on here? So nothing's going on, and then you get bored. And you think, and you realise that these industries who are now putting money, say, into esports, it takes them a while to get the things wheels turning, to find out how they're going to get into it and all that stuff. But once the money starts going in, it gets bigger every year, and more will pile in. And at esports at the moment, I genuinely think it'll be mainstream, and we're nowhere near anywhere near saturation point, and the big brands really haven't even started looking at it yet. And so don't jump out early, because I've done that with investments in clean energy, which has gone berserk after I've got out because I got bored, and I realised
blockchain.
Yeah, but I realised a lot of companies, and sometimes you're ahead of the curve and too far ahead of the curve. It's just timing. The thoughts are right, the research is right. It's just, you've got to have a bit of patience. And do you know what? And like I said, even with any problem, you've got to acknowledge the problem first. And I understand my problem is patience, and so I'm trying to deal with it. Yeah. No, but that's saying that. Saying that really. I mean, genuinely. You've got to identify it's alcoholic. The biggest problem with alcoholics is admitting to alcoholic, then they can deal with it, But if I don't admit I've got a patience problem, I can't deal with it. So now I am. And I've held companies now longer than I've ever held companies, because I know I'm still at the start of the curve. And I said with Gfin, for example, Gfinity, I said, listen, we're still on the first wave here. We haven't anywhere near mainstream. So, you get impatient with, and there's some warrants in there as well. The share price goes up and down and down. Don't get impatient. The company's improving. The margins are getting better. The turnover is getting better. It's growing. The people they're attracting to the company are amazing. The contracts are getting bigger. So just wait. It's going to happen.
Yeah,
just got to have a bit of patience.
I heard an amazing stat, actually. Esports is now bigger than the movie industry and the music sector combined. It's absolutely
but you'd be surprised as well, the lag though of investment that goes into it, because it takes a while. It's been the same with gaming, for a long time. People say, how do you get gaming there, how do you get into that, and all that stuff. How esports, offshoot gaming, and you realize there's a certain demographic you can attract or appeal to in that area you can't touch anywhere else. Like my kids, for example, if you advertise something on TV, they're not going to see it. You're not going to get them. You've got to be advertising on YouTube, on gamers, or all of that. So you've got to, hit that area. And so, absolutely.
Actually, that stat was for gaming. It wasn't for esports. The other thing I would say is, if you are slightly impatient, the best way, in my view, of sort of giving you a reality check is trying to do a valuation on the business. And if you have an indication of how much you think it's worth, then you can compare it to where the price is. And if you have a very bullish view of the sector or that particular stock, particularly on a hot stock, then frankly, it may have gone up 2 or 3 times, but if you believe it's going to go 10 times, then it's still massively undervalued. And that's a good sense check. If you don't know how much it's worth or got an idea, then you don't know whether it's actually overvalued, undervalued. So all I would say, that's quite a good sort of read across to be able to do it. I know it's difficult, but that's the way I would. Right.
And even if a company's risen on that first, for example, there's a company called Power Energy, and I was in for ages, and I kept saying, it's alchemy. This is amazing. They take waste, they turn into clean gas, pretty much, and they can use that gas, syngas, and they can use that gas power, and it's trucks, whatever they want to do. But literally, they're taking in waste that no one wants, and they're turning it into energy. It's phenomenal. And I was in it for years. I did loads of videos on them. Got out. Literally 6 months later, whoosh, through the sky. Oh my God! And but it's coming back a bit now. But I mean, it's like you've got to stay in a bit of patience.
That's EQ Tech, is it? That one?
No, it's Power PHE. That was.
Right.
And,
okay.
do
Fine. Similar
is
EQ Tech.
And that sort of area there was, I was holding for a while. I was in that for a while, and I did quite a few videos on them. And literally, I must have been over 2 years. I was interested in them for, and then I just got bored. But even if I'd kept a little bit in, it would have been, a good amount. But there we are.
Yeah.
Cool.
Also, I was actually had a very good chat to sort of legendary fund manager Gervais Williams, which I would strongly recommend investors have a look to. I know a lot of people already have. It's had an enormous response on YouTube. But if you have a bit of spare time over the weekend, small caps, he covers it brilliantly. And I
did start watching that. I was disturbed by building work. I was disturbed by the building guy. I have to go back to it. But no, I started watching that. Is there any stocks on there that stood out? You thought, I haven't heard of that before? I'm talking small capish. I'm talking about not bigger ones, but smaller cap. That I'd be.
What I thought was absolutely particularly interesting was he was talking about basically medicine going forward, and he has a similar view as myself, i.e. we're entering this golden age of healthcare, life science, innovation. We've seen it with the likes of Avacta, etc. And he said there was 2 things he looked for, was best-in-class technology and a massively engaged sort of management team who are really sort of really committed to it. And I'll tell you, there was a company who IPO'd this morning, and I interviewed them. Basically, you can see this one as well. CEO Monique Fayad and co-founder Marla Dubinsky. and this is called Trellus Health, which it basically does resilient, science-based AI sort of enabled inflammatory bowel disease management systems. And it's just IPO'd, and it IPO'd at 40.
Oh, yeah, today, was it? I think
it IPO'd at 40p, raised £28.5 million. It's now trading at 60p. And the reason is it's fabulous technology. So it hits that one, which Gervais was saying. And if you watch the video, I mean, I hadn't really spoken to the ladies before, but Marla and Moni, both of them are just so into that company. They're massively, you can just feel coming out the screen, the excitement, the energy, the passion with the actual business. They love it. They absolutely love it. And when you have people like that, leaders who effectively walk in the talk, it sets the whole culture in the business. And if they've got fabulous technology, which is what they have, it's game-changing stuff in terms of it should be able to help people who have Crohn's, people who have colitis. It's sort of treating or managing. It's managing and treating patients who have got sort of like a very long-term chronic diseases, which can't be cured, like Crohn's. I've got Crohn's, so I know exactly what they're talking about. So it can reduce the cost of hospitalizations, of emergency care operations, and frankly, it can also reduce the cost, as it did for me, essentially, of coming off Humira, which is one of the world's most expensive drugs, large drugs anyway. And you manage it through your own sort of self-efficacy. And you talked about it before. You've got your problem with patients. Yeah, you've got to accept it. Well, this is actually the same thing, because if you've got a chronic disease, you've got to accept it. And once you've accepted it, you can then manage it. Well, if you're always trying to battle it, and that's one of their first principles, that they take patients through that whole process. Anyway, I think they've got great technology. It's actually quite interesting because it's another spin out from EKF Diagnostics and Mount Sinai as well. So they've both basically invested long term in it. And what they're going to spend this £28.5 million on is a bit more sort of product development, AI, a bit of software, launching the product or the products and services. And then they should be cash flow break even in sort of 2 years' time. And they'll have instead of 28 million, 28 is more than sufficient to take them through to that. And if you run the numbers, I mean, it's only hypothetical, but if they took sort of like a 1% market share of the US, basically inflammatory bowel disease, they're going to get 100 million of turnover off sort of 30,000 patients. And on that basis, because it's a high margin, recurring revenue model, they should be able to do 30% EBIT margins. And if you look at that and just run those, and that's conservative, because it includes nothing for overseas, because they're going to come to the UK, and it also includes nothing from other chronic diseases, which they can also, be utilised. This is patented technology or patent pending technology. So if you've got 30 million of EBITDA, let's say 5 years time, and then you put a normal, again, conservative 15 times multiple on it, you get basically $450 million, which if you work through the numbers is £1.90. So I'm not surprised the shares are at 60p this morning, because people realise this is incredible value. And the science behind this is just, it's really difficult to I don't think anybody can replicate it. And one of the reasons why Mount Sinai was the first place that they discovered Crohn's. The guy actually discovered it in the 1930s. So they've got huge patient data associated with it. So it's a real sort of vertical, deep, model. So I would say, I think there's a lot of gas in this one to go further as well. Put it on your watch list and have a look at it. It's well worth it. And another one with massive good science, which is IPO this morning as well, is Belluscura, which does portable oxygen concentrators. And they're it's quite an established market. It's $1.3 billion market, growing at sort of like low double digits. But their sort of USPs is that their product is super lightweight, is modular, so it allows sort of like cheaper lifetime costs associated with it. It's energy efficient and quieter. And if you think about the patients who actually use this as a portable oxygen concentrator, it's typically people who have severe respiratory conditions, smokers, who basically, or the elderly, etc. So it might be, people with COPD, pneumonia, or even COVID. And if you need these things whilst you sleep generally as well, so they need to be quiet, they need to be lightweight. I mean, these devices, they've done, say they're portable or they're compact. They're only weigh sort of like equivalent to a bag and a half of sugar. I mean, it's frankly unbelievable. There's a video on it, so have a look. And all I would say is that you run the numbers, and I think this technology, they'll do $100 million of dollars of turnover, and that's on a 5% market share on a modest market. This is sort of using sort of like one research house, which was pre-COVID, saying that they'd get to, that market would go from $1.3 billion to $2 billion, sort of like by 2026. And if that happens, and you take sort of like a 5% market share, they get sort of like 100 million of turnover, put a 25% EBITDA margin, 12 to 14 times EBITDA, works through at £2 a share, and the shares, surprise, are up, from their listed price this morning at 45p, where they raised 17.5 million, to 53 currently. So, and again, I think that one's got a long runway. The technology is fabulous. The management team are really engaged on it. It's worth having a look at it. And I interviewed the two guys again, this morning. So have a look at the video. It's Robert Rorke, or Bob, and then there's Tony Dyer, who's the CFO. But they're making a great team. And the thing is, they haven't got that 17.5 million. They've spent most of the R&D. They've already done it. It's already been sort of FDA cleared. So they don't really need to develop the product anymore. It's just really sort of commercialization. They're not going to go capital light model, use third-party manufacturers to do it. And so it's really just distributing and bringing the product market. Now that is the base case, okay? Wait for the upside case, right? The upside case, do you remember looking on the BBC 3 weeks ago when you had pictures of Indian patients in hospitals on the floor, unfortunately motionless, trying to get oxygen? They couldn't breathe, okay? Surprise, surprise, basically they needed portable oxygen concentrators. One, to help them survive and get over the problems, but also just as importantly, to be able to give them that oxygen and allow them to return to home to alleviate the bottlenecks and over-resourcing the hospitals. Portable oxygen concentrators, exactly like Belluscura do, are required in places like India, Brazil, South America, around the world, to help patients who are basically, unfortunately, hospitalized to do this. And an oxygen concentrator is the best way, rather than getting one of these enormous tanks, because it's basically lightweight. It takes oxygen from the air, concentrates it, puts it to 95%, and allows these people to recover. And if you think about what's going to happen this winter, until we get a blockbuster therapeutic, we've talked about it here a lot, until we get that, we're still going to get an increase in hospitalizations in the Northern Hemisphere, no doubt about it, regardless of vaccinations in the autumn and in the winter. We will need oxygen concentrators. Surprise, surprise, the World Health Organization is trying to source 140,000 portable oxygen concentrators as we speak. It's only managed to get 30,000, which means the demand.
Well, point them in the direction of Belluscura. So come on, guys, there's a company just listed.
I'm just saying. That's the upside. At the moment, they haven't got capacity to be able to produce a large order. But do you remember turning your clock back to March and April last year when people were trying to make ventilators?
Yeah, I remember that. All companies are joining in.
This is an area whereby the underlying base case of respiratory conditions, COPD, pneumonia, all blah, 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 supports this stock more than enough. You get a £2 a share from a current 53, 54p a share. If they can deliver literally 10,000 portable oxygen concentrators, I am absolutely sure people like the World Health Organization would snap it up. The problem is getting the parts and manufacturing it, because the people, these are not easy to do. This is really high tech stuff, and I think they're in a great position. And frankly, yes, investors might make a good return, but more importantly, if it helps the world get through the potential third or fourth wave in the Northern Hemisphere this autumn and winter, that's actually more important for the world in terms of people's health and the global economy. So all I would say is I led into this with Gervais Williams saying, go for best-in-class technology and engaged leaders. Trellus and Belluscura hit the ball out of the park on both of those. and they're cheap. They're cheap stocks. Admittedly, they're still early doors. They haven't got any revenue, but the products, they've passed development. They're into commercialization phase. Hence, that both shares have responded well this morning. So certainly ones both to watch.
Yeah, well, do you know what? Do you know what I like is that people often ask me, do you invest or trade in the US markets? And I think a lot of the time when you're a new investor, too many options. You have option paralysis. Where do you go for? What stocks do you look at? Because the stocks are on the world. And I think that that's an example. There's plenty of opportunity within the UK market. You don't have to look abroad. And you know, in that vein, I've talked about this before, of course, but there was a study out this week on Polarean. I don't know if you saw that. Oxford University came out and they did a study, a follow-up on people suffering with what they say is long COVID. Now, they did a study on these people. It's only a small sample size of people, but the scan, and I'll read from here, is Professor Fergus Gleeson. He knows many COVID-19 patients are still experiencing breathlessness several months after being discharged from hospital, despite CT scans and normal MRI not picking them up. With Polarean technology, they've found abnormalities in breathing, in lungs, and all parts of the lung. They picked it up with Polarean's technology. They couldn't pick up on the best of what's available right now to CT MRI. That is phenomenal. And Richard, the CEO, is so conservative. I want him to really be a bit more, promotional, but he won't. But he did say recently, he said, well, I see pretty much polarizers like this being in all hospitals going forward. And I thought, that's a bit over the top. And I thought, hang on a sec. How can you deal with lung conditions if you can't see them with the current technology? And I thought, that's right. If their technology is the only technology that can do this in the moment, and if they get FDA approval and hatch waxman protection for 5 to 7 years, he said, in 10 years, polarizers will be in all hospitals. That's phenomenal. And I was talking to him yesterday, and I said, I was just running some numbers on the broker note here, and even on 10% of America and all that stuff, you're like a FTSE 100 company valuation. And if you extrapolate that to the rest of the world, I mean, you're talking one of the biggest companies in the UK. Oh, yeah. I said, is that crazy? He said to me, no, it's not crazy. Sometimes I think about that and I think we don't never put things like that out there, of course, because that's still in the future. But that's entirely possible because they honestly see it'll be the new way of doing things. He said, when you go back to the 70s and then X-ray and all they had, and then MRI come in, people didn't think there's a need for them, or CT or whatever, and all of a sudden there's a new way of doing something. And I genuinely think this will be the new way of doing it. If you can't pick up the problems right now with current tech, but there's tech out there that can, this tech will, supersede that tech, and it's an addition actually. So, I mean, all the big GE, Siemens, and all that stuff, and Philips who produce the MRI scan, it's addition to that. So it adds on to that. So they'll just make these new scanners with this tech embedded. So I genuinely think, again, another company listed in the UK that's phenomenal upside, and could genuinely be a massive company, and yet to stay in the UK. I love that. So Trellus, like the sound of Belluscura. In fact, they spun out from Tech Capital. I've had Tech Capital on the podcast.
Yeah, they were a big shareholder, probably still are, I guess.
Yeah. So Clifford, who's the chairman of that, I've had him on loads of times for years. He's been on Vox, and they've got lots of opportunities just like that. And they are taking university IP. And they sort of spin it up and stuff, and I quite like. But
again, it comes back to sort of like what Gervais was saying. We have entered an era of medical innovation, and the reason why that is because you've got new technologies like gene editing, sequencing. You've got sort of like immunotherapeutics, immunodiagnostics, and all these new technologies. It's doing two things. One, it's opening up new areas in life sciences and healthcare, i.e. that we haven't been able to address the problems and conditions that ever before. Additionally, things like genomics sequencing is speeding up the whole innovation process. So one, it's opening. So the first bit, it opens more doors to be able to solve medical issues, which is like Polarean, okay?
Yeah.
It speeds up the process of opening new doors. Okay, brilliant. Yeah. And one thing we've also realised from the pandemic, and regulators have, is that they need to pull the finger out and get products that can and make huge differences to people's lives, and also to sort of hospitals and healthcare around the world in terms of cost and treatment, like telemedicine. The regulators need to actually approve these and speed up theirs, and that's what happened with the vaccines. That is the three elements, the three legs of why we're entering a medical revolution. More doors, quicker finding these doors to open, and faster regulatory approvals.
But also, a lot of times, like you said, the vaccines normally takes 10 years. We did it in 10 months. A lot of that, like I say, is regulatory, but also funding. When you're up against it, and we're in the middle of a pandemic, it's a panic. Human innovation is phenomenal, and the speed in which there's vaccines, and a lot, like I said, regulation, of course, speeding that up, but also the funding, the money that went into it.
Yeah.
And you realize if you've got the funding, you can do it. And that's the way it is. And so it's amazing. And I think now it's like the race for space, and how that spun out lots of tech.
Yeah.
When that happened, it was like Russia against America. This, the race for the vaccines and the race for the cure here is very similar. We've come across, so much new tech now being developed a lot quicker. And I think going forward, even, in fact, today, I think it was Oxford University setting up a council for future pandemics alerts and monitoring. And I think now we're better placed just out of all these testing companies. The tech has improved so quickly over the last few months that now we hopefully will detect a potential pandemic before it happens next time, and we won't. And it's worth it because look how much money's been lost to the economies of the world due to shutting down. So of course there's incentive there because you don't want to lose that money. So it's an insurance policy, really, isn't it? So
it's my number. Healthcare, life sciences, and medicine is my number one investing sector by a mile. The opportunities are huge. As I say, Polarean, Belluscura, Avacta, Trellus. I mean, those are just four we've just talked about today. This huge opportunity out there. And all I'd say is for investors, I haven't got any spare cash, but I want, looking. I want somebody to take over one of my companies, so it gives me a bit of free spare money to put in. But the place I'd put the extra marginal money would be in healthcare, or technology is another area. But I actually think the biggest opportunity by a mile is in healthcare, and investors should not ignore it. Absolutely not ignore it. Don't be underexposed to healthcare and medicine because it's just got a huge runway ahead.
Yeah, exactly. And one of the biggest problems we have on this planet, in fact, cutting down the population would solve so many issues. But we haven't. We have a growing population, and the elderly growing as well. So we'll always have that massive population strata.
Yeah, demographics.
Constant healthcare. So it's only going to get bigger. But any other companies worth looking at?
Just pop through. Other ones I've invested in, and I'll keep investors updated. First one is Equals, etc. Now it hasn't come out with any news. It's got its AGM on the 10th of June. Now, the only reason why I mentioned this is because one of its biggest competitors, Alpha FX, is actually valued at about 9 times sales compared to Equals, which is about 1.5 times sales or something like that. But Alpha FX came out with a trading update yesterday. And they said their trading was ahead of expectation, was really positive and flying. And if it continues, they will significantly upgrade sort of like their forecast for 2021. If you've got a close competitor, i.e. in e-payments and international payments, that's knocking the ball out the park, I think you haven't got to be Einstein to read across and say, actually, that's UK business to business, e-payments and Forex to suggest that actually when Equals come out with an announcement at their AGM, and I haven't spoken to them, so I really don't know, but I'm a holder. I just take that and just think, crikey, that's fabulous. And I'm expecting them to have a positive start, to replicate that one. So put it in your diary, 10th of June for their AGM. So, investors can get good read acrosses from looking at, how competition are doing because the market is flying. It's like the house builders. If one house builder's doing well, most of them are doing well. And that one's with Equals. So I'm pretty much like it. And the important bit on that one as well is another thing to note. The shares haven't moved off the back of it because you've got a large shareholder, Crystal Amber, who's been dropping some stock into the market. Now, for long-term investors like me, that doesn't worry me. And the reason is because if the price stays depressed, but the value of the business is increasing, eventually that gap's going to close. It's just as a matter of when, not if. So don't lose your patience if somebody's selling shares in it. At some point in time, that stock overhang will clear and the shares will track towards value. The important bit is the valuation. The intrinsic worth of that business is increasing because it's, in my view, unless I'm seeing something, smoking something, that business is doing really, really well. So
that's why sometimes, I mean, with small cap stocks, there's always, a big seller there's always going to be people selling. That's a part of the market, and that always affects the share price. And sometimes that's why I sometimes scale in, because I expect that to happen. Once the share price starts to rise, you always get a bit of a seller knock the price, and if you get a bit of liquidity there, that's always going to happen. But that's why sometimes I hold a bit back. And I think because if you get in sometimes and it has a little bit, a little bit of liquidity, and you talk about it, and then all of a sudden the seller comes out, raises his ugly head, and starts selling, and the share price goes on. Hang on a sec, what's happening here? That's not supposed to happen. So that's sort of why I sort of hold back.
You like sort of dodging and weaving, don't you, on the market? Where I sort of like just stick my both big feet in and just dive in.
Because it's one of the things, you get sellers in every big company, but the smaller they are and the bigger the holder they are, the more it affects the share price. So it can be frustrating. So sometimes you'll do that. And like I said, if you've got cash, it's an opportunity. When a big seller happens and you like the company, and often we've talked about this before, I've had people who are new to investing said, if someone's selling there, that can't be good. No, hang on. It genuinely, 99.9% of the time, it's specific to the sellers. I didn't do with the company, Yeah.
Well, I think with Equals, this Crystal Amber, I mean, I don't know. It's the chap who runs it, I think, is a guy called Richard Bernstein. My sort of suspicion is that he probably just needs the cash to redeploy in other areas, or even pay some redemptions for investors. I don't know. But all it means is if the business is going up in value, at some point in time, that price will track upwards. And I don't care. It'll happen at some point. The key thing is the management team is doing a great job. The sector is strong. As the UK economy accelerates and recovers, then these guys are doing well. So it's frankly good. Now, just stepping out of the small cap world and going to sort of big cap. If there's any investor there who wants big cap, I can tell you a couple of them which is worth sticking some money into, because I've done well out of them, and they've still got plenty of gas. First of all, Aviva came out with a trading update. The CEO there, Amanda Blanc, is knocking the ball out of the park, doing a great job. She sold off a whole bunch of overseas non-core assets, and so they came out and said that they've got basically 6.6 billion pounds of spare capital, which will be coming back to shareholders. And when you run the maths, that's £1.65 of cash coming back to shareholders. The shares are only worth £4.15 at the moment, so you can get £1.60, say. That'll happen in a combination probably of buybacks and also sort of like special dividends, and they probably will also invest in their organic growth as well. So I wouldn't expect everything to come back. But I think there's no reason why that isn't going to head over a £5, because that's where it was before, and it still wouldn't be. It'd still be sort of like at a discount to net book. So there's plenty of upside. If you want a large cap where he pays a nice dividend, solid, good management team going through restructuring, then you can't really go wrong with Aviva. I mean, I've ridden it up. I bought sort of like during the summer last year, and I made 50%, but I'm not selling. I think this is going to £5. I'm sticking with it.
With me though, you're probably. I mean, that I've got to have a business, and I realised this a while back. When I first started off, I just jumped into companies I think I can make money at, But now increasingly, I want a business. I sort of get a little bit, excited about being a business. No, I want to be a business owner of, and genuinely. If I, thinking, I genuinely like to hold some shares in that business. Not make. Obviously, you want to make money, but as the business has to appeal to me. Aviva would never appeal to me for some reason. It's just, it's you know what?
Well, it's doing a good job anyway.
I know it's doing a good job, but I can't get excited about that.
Okay, well, another one you're probably not going to get excited about, which is a big cap, which I'm absolutely convinced is going to. I mean, I made a prediction of the day. Okay. A couple of days ago, that this one, Granger, which is the UK's biggest private landlord, resident, they've got sort of like 10,000 or whatever it is property.
I can get a bit more excited about that because I quite like property market anyway, and so that's a sort of barometer in some way. So I get more. That to me, that's more tangible to me. I can.
Okay. Well, they rent a large portion of their estate out to young professionals, and they've been hit obviously during the pandemic because most of them left big cities from these build to rent properties. Went back to the parents, like my two kids, and have now just started returning. So my view is that actually their occupancy levels for these properties will increase significantly. The shares are still trading around about net assets, but the reason why I say it's going higher, and I could see it, and I think this is the prediction, I'm almost certain they're going to get bought out in the next 12 months. You've had Blackstone buying, I think it was St Modwin, which is another big, property developer and renter. just around Birmingham, actually, a couple of £1 billion. And then you also had KKR, US1, buying Lang Homes, or Lang, John Lang, that is, just last week. Granger's a similar sort of asset, similar sort of price. And the reason is that these big guys, these, infrastructure funds, have got two things. One, access to unbelievably cheap capital. It's sort of like they can finance these purchases of likes of Sir Modwin and John Lang at sort of less than 2% interest, even though they're a higher firm. I mean, that is just unbelievable. So that's one. And also what you get, which is again fueling this whole thing. You've got all the continued quantitative easing going off by the central banks. Well, they're buying investment grade, this really will bore you. They're buying investment grade bonds, okay, which has kept the prices down on the yields on those bonds, okay. You can't make any money out of investment grade stuff, and obviously the yield curve is steepening. So where is the sort of smart money going? It's going into quasi bonds that have inflation proof and will pay you a dependable recurring revenue streams. Where's that? Infrastructure, it's residential homes, it's basically build to rent, it's it's student, even purpose-built student accommodation, anything that is a quasi bond that is inflation proof, because we've talked about inflation coming back. This is what the smart bond investors are moving into. And that's why the funding for the likes of Blackstone and KPR are so damn cheap, because they've got so many people offering them money to get them assets that are effectively secure bond-like assets. Hey, buying a cheap UK landlord, the UK's biggest landlord, is one way of doing that, and Granger fits the bill. So I'd be stunned if they're not bought out in the next 12 months. But we'll wait. And see.
But listen, let me say to someone: you should never invest in a company just in the belief that they're going to get bought out. That's not an investment.
No. But this is a safe, steady one. They're trading at net assets, so there's no premium in there for an acquisition. This is just solely.
But that's speculation, there, isn't it? I mean, pure speculation. You have no idea. But I mean, of course it could happen. It looks good, but I've heard people, before buying into stocks, thinking this is going to get taken over. First of all, you should just buy into a good business, and good businesses get taken over generally. Something. So
I agree. Yeah. But I mean, let's be clear. If you want to diversify your portfolio and have inflation protection, getting into property is actually a pretty good way, okay? So regardless of that, if you want to sort of up your protection, rather than going into a bond, then Granger's is a quasi bond, basically. That's that's the best place, one of the best places for it. It'll pay a good dividend yield, good earnings yield. And then you get, if it's a takeover or M&A, you get it in for free, which it is.
A good way to beat the inflation is to invest in a 10-bagger.
You're right.
It's one of the best ones.
There aren't many stocks offering 10 bags, 10 times your money, which is risk-free either.
No, I know. Talking about patience, actually, in psychology. Go back to that book, The Average, and that book was quite funny as a title, but it was very well studied and, in fact, quite heavy to read. That study of 100 baggers, and these companies that ordered 100, and the average time it took a company to 100 bag, 26 years. So it's about patience, But just let me ask you one thing on psychology, right? You say, you're an equity analyst, and I've probably asked this before, but you see lots of opportunities. In fact, you've named a couple there, Trellus, for example, and already I'm quite interested in that. So how do you stop, getting impatient with one stock you're holding that's not going anywhere, but you see another stock with decent potential and upside potential, like I said, proprietary technology in a big market, commercial market, and how do you stop yourself just hitting that button there on one of those stocks and buying into that?
The single best way of doing it is you've got an idea of what the thing is worth, what that asset's worth, and where the price is. Gives you an indication if it's fair valued, overvalued, undervalued. And most of my portfolio core holders, I still think they're trading way below sort of intrinsic worth, and that's the best
but hang
way.
On a second. Let's do a comparison. You hold Lloyd's, for example. Do you still hold Lloyd's?
Yeah. I think that's going well over 50p. Well, it is almost.
I know, but listen. So let's look at that. Let's look at percentage gains here, right? On Lloyd's, for example, compared to something like Trellus, all right? Because you were thinking, how much should I get out of Lloyd's? And what's the price at the moment?
It's 50, nearly 50p.
Nearly 50%. So, what percentage gains do you think you'll make on that?
Well, I've made about 50% so far. Okay.
Well, there we are. That's good, isn't it? How much more?
It is. It is. Yeah, and I'll probably make, but I'll probably come out of it once it gets over net tangible assets, which is about 55, 57p. If it gets to that, then I've probably made 60, 70% of my money. But you're right. I mean,
what's that? So what's that? How much? Another what? 15%? Is that what we have to? Or what? We have to.
No, that would be it'd be basically around about, if I got out at about sort of 57p, for instance, which is probably around about net tangible assets by the end of this year. That would be round about. That'd actually be a double. Actually, that would be round about 100% gain.
Yeah, but from here now, you're going to get an extra what out of it? Another 15%? Is that right?
Yeah. Okay. Yeah, another 15% from here.
So how much do you think you're going to Trellus over the next year or so?
Well, if you'd been in Trellus, you'd have got 60p, wouldn't you? Sorry, 60% on day one.
But genuinely, of course, it'll pop today and may come back,
Okay, if it finishes at 60p today, okay, my fair value for Trellus is £1.90, which is a 3 times.
Well, that makes no sense. Then you're holding Lloyd's. If you're convinced of that, how much are you convinced of that?
It does.
Holding Lloyd's,
it does
because Lloyd's sense. Because Lloyd's is safer. I know, but
no, it makes perfect sense because you've got to have a balanced sleep at night. I don't sleep anyway, but I mean a sleep at night.
Exactly. You've got a balanced non-sleep at night portfolio.
You need a selection. I just realised how to conquer your sleep, your insomnia. You basically need a really unbalanced portfolio, and it'll worry you to sleep. You'll be so exhausted because at the moment you're balanced and you're not sleeping. So maybe you should just get unbalanced. But I understand what you're saying. I want my portfolio construction is about 50% small cap, micro cap, and about 50% large cap. My biggest weightings are in effectively high gaining sort of healthcare and tech. But I've also got things in banks, insurers, property, that kind of stuff, because essentially it just gives you that level of balance that, I mean, if there was a really problem in one particular sector, one particular stock, I can walk away from it. It'd be painful, but I don't want I don't want my family's quality of life to be, sort of like disrupted.
Does that mean if you lose a lot of money, it'd be a nightmare to live with?
I don't want to disrupt. They shouldn't have their lives disrupted by my mistakes. Okay.
Yeah. I'm trying to talk to you. Don't talk to me. My portfolio. Yeah.
Exactly. So you've got to look at your total sort of like some level of diversification, risk tolerance.
But you just said to me, healthcare is the place to be.
It
right?
is.
Lloyd's Bank is not convinced. Dump Lloyd's Bank at the Trellus. Go on.
Not yet, mate. Not yet. But that may well happen. As I say, I want to certainly get further into healthcare. I mean, healthcare is already 20% of my portfolio, which is a big number already. Okay. The technology.
Nothing more important than health. I'd notch up to 50% of your portfolio if I were you.
Yeah. Okay, fine. All right. Well, I'll take your advice with a pinch of salt then, Justin.
That's bad for your health. Don't take too much salt.
I'll just ignore it.
Yeah. No, but I quite like to. I look at that. I'm not going to go for it now. And the key is as well to not jump on everything when everyone else is jumping on it, because we know the IPO is a day when everyone's shouting about something, and it may go up and down. It's like same with Ricci actually. It went up. It just let it cool off. It's still a better company it was. I mean, it was higher a month ago or 2 months ago, and it's a better company now. They've done more deals.
Well, if you'd have bought it after day one of Ricci of the IPO, I think it hit 34p. The shares are currently 70, so you'd have double bagged if you'd have bought them at the top of the IPO.
Yeah.
Anyway, but I would say to investors, if you are interested in Belluscura and Trellus, have a look at those videos, because both management teams are top notch. The technology is excellent, and I think there's a big runway ahead. They're small caps, but they're all the effectively all the R&D risk and the product risk and service risk is largely basically already taken away. They're basically just about to start selling those products and services to customers. It's mainly now commercialization risk, and the upside is huge. So have a good look at it.
Will do. Cool. Anything else? And
I hope you have a great holiday. Enjoy yourself.
I'll take your tip of going on a mackerel fish.
Yeah, definitely do that. Tell me how many you catch. Send me a text.
Yeah.
Put it onto Twitter how many you catch, and then also a picture of when you've barbecued it, because it's wonderful, absolutely wonderful. And the weather's great for you, so you'll have a perfect time. Your lads will love it.
Yeah, we'll do. That's another good tip from Paul Hill there.
Along with crabbing, go mackerel fishing in the morning and crabbing in the evening.
That's why we're going there. We'll be coming home smelling very fishy. But lovely stuff. Thanks for that, Paul.
Yeah, see you in 2 weeks. Cheers, Justin.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5. Quantum Blockchain, down 25% to 1.4. As of course, the crypto market's had a bit of sell-off today. At 4, Challenger Energy, up 914%. I think that's share consolidation. To 3.05. At 3, Hemogenics Pharmaceuticals, up 7% to 1.875. At 2, Trellus Health. It's up, but I can't quite tell. Date has not come through yet. IPO today. We talked about it in the podcast. And at 1, Belluscura. Also, I assume rising. First day of dealing at 54.5 pence. I think Trellus floated at 40 pence. They're now 62.5. Belluscura, where did they float? Let's have a look there. It's 54 today. And they 45 pence up to 54. So they're up as well. So 2 IPOs most followed today. That's it for the podcast. In fact, apart from, let me just go to the top 5. Most read RNSs are as follows. At 5, it is Quantum Blockchain Technologies, Cipium Court hearing update. At 4, Ecutech or Ectech, placing subscription to raise 15 million. Primary bid offer as well as 3, Coastal Minerals, Gold Exploration and Mali update. At 2, and at 1, Avacta, response to media speculation at 1. That's it for the podcast. Thanks for listening. Muchos apreciados.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.